Hello, ladies and gentlemen. Welcome to the show. Glad to have you guys here. Now, today is Sunday, the 17th of November, 2019. Let's get started. Let's open up the charts right here and take a look at what's going. Whoops, sorry, pressed the wrong button. Just give me a second here. Uh, there we go. Okay, let's get started and take a look at what's going on. Cryptocurrency. Bitcoin and all the other coins together are 237.3 billion, 65.8% Bitcoin dominance. See, the coin's starting to go up a little bit again. Now, here's what I got to tell you about all this. If cryptocurrency right now, and the environment is right for this, can start to actually catch a bid in this turbulent time that we're having with the Fed injecting a lot of liquidity into the system and the uncertainty in the markets and everybody looking for yield. At this moment in time, if a consistent bid, it doesn't have to be a big bid, but if a consistent bid starts to come in, a very slow rise in the price of cryptocurrency, what can happen, because the market's right for this, is massive amounts of institutional money could start to pour into the space. Now, I know we've been waiting for this for a long time, but the timing wasn't quite right. The timing is getting right now for this. It's getting ripe for this. And what we need to trigger it, what we need to see to trigger it, is a slow rise in the price of cryptocurrency from where we are right now, so that it starts to look like a highly performing asset class. That way, what will happen is we could get a massive shift in investor sentiment toward it. Let's take a look now at this article. Negative interest rates driving institutional investors to Bitcoin. Crypto Trends Report. It says Bitcoin has firmly established itself as an institutional store of value asset class and seeing interest from new funds. This comes from the CoinShares report. Lower yields are prompting institutional investors to seek riskier investments. Negative interest rates, easy monetary policy, Brexit, and upcoming U.S. elections are driving the demand. Bitcoin physical markets have advantages over the gold market. I can think of one of those huge advantages right now has to do with allocation. Bitcoin, if you're a serious investor, can be bought with the press of a button, and it's instantaneously allocated to your wallet. Okay? Now, physical gold. First off, it's the allocation that's the big problem. With negative interest rates making their way into major economies around the world, what impact it will have on Bitcoin? CoinShares digital asset management firm released its Crypto Trends report for November 2019, where it talks about how the negative interest rates are pressuring the traditional banking model and shifting the investment strategy. You know how much money, how much liquidity is floating around out there, guys, and what a small, tight market Bitcoin is in the cryptocurrencies? We could see flows of money coming into this like we've never seen before. If you think 20,000 was high, if the big flows of capital start to come in, 20,000 would look like nothing for Bitcoin. And Bitcoin could go up to 100,000. And all of the other coins would follow suit, and, well, you can imagine $1,000 Litecoin, sort of thing would not be out of the question. It says, as such concerns regarding a recession cycle have risen, the contagion that could spread quickly across even the healthiest of markets. The prices of hard assets might be above pre-crisis levels on the back of cheap money, but the median income trails far behind median house prices. These concerns have investors returning to the gold market, which is on a steady rise. Bitcoin has established itself as an institutional store of value asset, is also seeking or seeing interest in the new funds. Lower yields prompt institutional investors to seek riskier investments. As we can see, currently the economies are making a shift from cash, but demand for cash is still on the rise. The report mentions that the euro's total cash value outstanding in banknotes is now exceeding 1.25 trillion, with the US following the same trend. To control this upward trend, regulators are placing ceilings on potential cash use. Without cash, depositors would have to pay the negative interest rates to keep their money in the bank, making consumption and investment more attractive. This would jolt lending, boost demand, and stimulate the economy, says the IMF in one of its posts. I think that Christina Lagarde recently said something like, I'm not going to quote her exactly, but something like, it's good you all have your jobs. So what if your bank account's not earning any interest? At least you still have work. Something to that effect, It's like, come on, people should have savings. They're destroying the middle class. They're destroying our savings with these negative interest rates that they're pushing down our throats. It's kind of like they're sitting in their ivory tower and they don't care. They just want their policies to go through because they see no other direction which they can turn. They're actually being forced into these policies. Federal Reserve banking system. Stablecoins pose a potential risk to the financial stability of the entire system. Yeah, they're right. And you know what? Stablecoins is being pushed. It's being driven by this failing economic system. There's a lot of things that are being driven by this failing economic system. These are here to stay. This is going to grow huge. And it could grow so fast that, yes, it could pose a risk to the old financial system and their so-called financial stability, which is not really stable at all. It's a failed system. Just that they haven't seen that it's failed yet. It says stable coins, the global system with so many ifs. Transparency first. The Board of Governors of the U.S. Federal Reserve System have issued their monthly financial stability report. This special report is dedicated to the profits and risks of global stablecoins. The global system with so many ifs, ands, or buts. First, the Federal Reserve admits to the numerous advantages that stablecoins present as a concept. It's more than just a concept, guys. This is going to move so fast. It has been highlighted that stablecoins are faster, cheaper, and a more inclusive payment structure that could complement existing payment systems. This is in comparison to cases where traditional financial institutions are sophisticated and poorly accessible, I should say. Stable coins can also be managed to eliminate the volatility of cryptocurrencies, which is one of the borders for them to be utilized as a medium for exchange. They're listing Facebook's Libra as one of these stablecoins that can rapidly achieve cross-border adoption or cross-border payment systems. We're really moving into uncharted territory, and we're moving so fast. I can't even keep up with the news of it. It's moving so fast. I'm going to tell you guys right now, we're at an inflection point with cryptocurrencies. If cryptocurrencies catch us a bid, the money that could come pouring in from institutions, especially into the Bitcoin space, could absolutely be phenomenal, because these guys can buy with the click of a mouse. They can buy unbelievable amounts because they've got billions and billions and billions of dollars at their disposal to move in whatever direction they want to move it in. And if a few of them start to move in that direction, all the rest will want to pile in to get there first. And You know, I mean, it's unreal. All I can say to you guys is this is going to happen. I'm just seeing that it could actually happen sooner than later. That's what I'm pointing out to you guys, you know. But it is going to happen eventually. They're all going to come flooding in to the cryptocurrency space eventually. But things are set up in a way where it could happen much sooner, right away. So HODL your coins for whatever I would. That's my suggestion. I'm not a financial advisor for you guys or anything. Not financial advice, but I just see HODLing as the thing to do. You know. Anyway, listen. Thank you guys for listening to this show. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the next video. Bye bye.